Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hey everybody, it's just me today. Bill had some logistics today, so he will be back next week. I'm going to walk through a little bit about what natural gas, crude oil, what it looks like supply demand wise now and into the end of 2024, what could change and what drivers are going to be there. So I'm going to review this. It's probably going to be about 30 minutes long, I'm guessing. I will take questions, but since it's me, we're not going to take it dynamically. I will take those towards the end. So feel free to type them over because I do see them from LinkedIn and YouTube. I've never seen questions come in from Twitter, so if you do, I don't know if I see that live, but anyhow, so thanks for joining. What we're going to talk about today is we're going to talk a little bit about what the energy market outlook looks like, natural gas, crude oil, some of the trends that I'm looking at, because I constructed this and actually shared it with our members, which reviews production demand, storage, and production demand on the crude oil side. And I'm going to be adding in some of the crude stocks over time. So let's dive into these insights. Let's see what we got. Let's see what we got going. So on the production outlook side, fluctuating production and high exports. This is a key factor that is really going to drive where natural gas prices are. I'm starting with natural gas. And before I hop over to crude oil, I'm going to tell you a little bit about Energy Rogue, Rogue Edge, Rogue Premium, and give some alternatives there. So when we look at the production outlook, we are starting, not really the year, but we're starting at 102 BCF a day in March. This is expected to decline below 100 BCF a day by year end. I'm just going to show you a little bit. This is in our Rogue Edge platform that is $89 a month. I'll review that in just a little bit. But one reason that natural gas prices have been under pressure has been because during 2023, we had this type of supply curve, which on the supply side, everything looked relatively flat. And then in the fourth quarter, it jumped up. Now, there's a couple reasons why Permian production went pretty high because of two pipeline expansions that increase the supply there. But let's take a closer look at what's happened since. Since that high point at 105.8 BCF, which was reported on December 21st, we're down to the weekly average. Last week was 101.4. This week is probably going to be closer to 100. So one thing that we track on our platform is we track what the base decline looks like and what new production looks like. And let me show you what that looks like. So what we do is we take a look at the base decline in the basin, and we are declining every single month by over 3.4 BCF a day. So whether we add is whether or not we're above or beneath that number. And the past couple months, we've been beneath it, so we're treading water. Add into this some announcements such as Equitable, Consol, Chesapeake, who are reducing some of their output in 2024. So when we look at the net we are essentially treading water. So the last couple months, we've been set to decline by a couple 100,000 decatherms a day. This is on raw supply and demand, on decline and new production. So I've modeled that here, and this is if we keep our new production pipeline pretty well coming. So if I toggle this down, as the announcements are expecting, there is a case that we get below 98 BCF a day. That would change dynamics to actually put us entering storage at 3.2 TCF. So there's a lot of questions on what the decline is going to be, what the new production is going to be. And listen, if you want to go a little bit deeper, come join our service. It's Rogue Edge is $89 a month. If you want a little bit more interaction and interact with our Discord channel, where we talk about trends as well as this spreadsheet interactively, as well as anything that is going on in the energy market, that is $179 a month. So a rather cheap investment, especially if you want access to these charts. You can interact with them, click this button, download an image, put it into PowerPoints, share it on email. You can do whatever you want with the charts. Sorry. So let's get back to the presentation. So production, 102, and a possibility of being below 100. Let's take that as a base case. Demand and exports. EIA is expecting 12.1 BCF a day of LNG exports for 2024. I think that's on the low side. We're currently up above 13. That is also with Freeport being down. So let's take another look at the demand side, and we'll take a look at the storage. Well, not storage, the LNG exports. So let's take a look at the LNG exports. This year, we've been averaging 12.9, 13.3, 13.4. February with 13.9, that included Freeport. So when, and this is part of the power of Energy Rogue and Rogue Edge. Would love to see you. It's $89 a month or $179 if you want interaction. But this is the power, is that we can discuss this and visually look what has actually happened, and you can interact with the chart. So I think the EIA number is a little bit low, but on the base case of supply drifting down from 102 to 100 and LNG at 12, pipeline exports are going to hang just above 2 BCF a day. This means that we will enter the storage season around 3.4 TCF. If the demand curve holds true with what EIA is projecting. So, and for those that aren't familiar of how much that is, let's take a look. Last year, when we entered the storage season, we were at 3.7 TCF. So we're arguably 500 BCF a day oversupplied in storage stocks. This projection could mean that we're not only going to reconcile the 500 BCF, we're also going to go 300 BCF in the deficit, and that's entering into the winter season. Now, a lot of questions come in place. Is production really going to decline like that? Again, let's take this 3.2 and flatline it. We're even at a 99 BCF a day come December in this scenario. So this projection would take us to a storage of just under 3.4 TCF. So that could lead to storage concerns. Now let's take a look at crude oil balancing. Global production of crude oil is averaging about 102 million barrels a day in 2024. Demand trends are set for a little bit over that 102.44. And this is set to grow by 0.8 BCF, 0.8 mm, 0.8 million barrels a day. I got to slow down a little bit. But non-OECD demand growth is over 2 million barrels a day. This includes India. This includes a lot of emerging economies. And barring anything unexpected, we could actually fall short on some of the global production, which does open the door for OPEC to come back into play. So let's hop back over to the natural gas supply dynamics. Production volatility, we're expecting that to kind of bounce around. Demand stability, it's going to be pretty consistent throughout the year. Obviously, having summer growth and that summer growth in some of the demand, because April, May are going to be light demand days. Again, ask any questions. Feel free to ask any questions out there. Export growth. LNG is going to be averaging 12 BCF a day. Our LNG expansions, most of them got kicked to 2025. So I do expect that to really change the shape of what 2025 looks like. Storage risks. So if we truly enter the season at 3.4 TCF a day, or 3.4 TCF, you can see, let's actually draw this out. So let's actually, when was the last time that we entered the season this way? It was not here. The last time we were that low, gosh, 2021, we were at 3.6. So that's about the closest. That was coming off of COVID. That was coming off a lot of rig drops. So 2021 was the closest. And we know what happened in 2022. The price went up to $9. So there's a lot of volatility that could be coming, but you got to stay on top of it. You got to keep watching storage, production, exports every single week. So some people watch it daily. I think weekly is fine. Crude oil market dynamics. The global production is expected to be 102 million barrels a day. Demand 102.44. So OPEC is projected to grow by 250,000 barrels a day in 2024. That does not factor into the equation some of the curtailments. Non-OPEC crude oil production is expected to grow by 1 million barrels a day in 2024. This one I take exception because most of the growth is expected to come from the US, Canada, and Venezuela. Venezuela/Guyana. So Venezuela, Guyana, I can see maybe a couple 100,000 barrels a day of growth. US, I see treading water and staying flat. Canada is now starting down the same path. So on the natural gas market outlook, the production declining trend, consistent demand, and high exports are the key takeaways here. And those are the key things for us to take a look at. So the crude oil market outlook, global supply and demand trends, this is going to depend on the economy. It's also going to depend on what OPEC does, because Saudi Arabia is holding back a lot of barrels. If they start to let those out into the market, such as 2014, 15, we will have prices drop down. But absent that, prices are going to continue to grind up. As a matter of fact, I think we'll be at 100 $100 a barrel later this year. Key takeaways: natural gas volatility. We expect the production to start the year strong, but then drop off. Crude oil balance. It's relatively balanced for 2024. Monitoring key trends. The ongoing monitoring of supply, demand, storage, as well as crude oil dynamics. I'm gonna say we established this so that you could easily capture information on the fundamental and technical side of the market for natural gas, crude oil, refined products, natural gas liquids, electricity, and renewables. And with us starting this, we have grown internationally, we have grown in the United States, and it's key to stay on top of this. You don't have to subscribe to Energy Rogue, but we have an affordable solution at $89 a month if you want just the charts. And if you want to go a little bit deeper, Rogue Premium gives you access to our Discord community. Plus, you can have meetings with myself and my partner, Bill. So, stay on top of these trends because that's going to tell you where the price goes. Staying informed is going to be key, and that is what we're that is what we're all about. So I am going to open it up to questions, but I am going to walk through some things. I haven't seen any questions come through. If nobody has questions, there is information down below. If you want to subscribe, if you want to connect, if you learned anything, please like, subscribe, share it. It really helps. But let's take a macro look at what 2024 holds for pricing. So the remainder of 2024 for WTI is up over 79. Henry Hub is all the way down at 238. Now, something interesting when you look at the volatility, here, crude oil starts for the May contract 81.62 and exits the year at 76.92. So think about that. That's $5. So the key question is when we exit the year, are we going to be closer to 76 or 81 or even higher? I actually project a little bit higher, but tell me what you think. I'd love to hear it, and we'll definitely get back to you. So on the strip price for Henry Hub, 238.4. Let's take a look at the monthly. So on the monthly side, we exited the April contract at 157 last night. The May contract closed at 179. I think that's down 8 cents. Yeah, about 8 cents or 7 cents. It's at 172 right now. But look at this, $3.42 by the end of the year. So this tells you what the forward market expects, that below $2 is a temporary event. This has to do with demand, and this has to do with what a warm winter we had. So we had a very warm winter, and as a result, natural gas prices eroded down. And if you take a look at this is where we came from, which was all the way up around $9 and all the way down to this 161. So we've come all the way down here. I think we've overcorrected. I'm not going to cover heating oil today. So let's get back to the key takeaways. Natural gas, I expect volatility. Crude oil balance, I expect that to be relatively balanced. Got to watch OPEC and got to watch US supply. Monitoring key trends, that's where you're going to want to be. So listen, haven't had any questions. I'm not going to keep you any longer. I appreciate you coming. I appreciate you stopping. If you learned anything, please like. If you and I would love to hear from you in the comments. That stuff really helps. So if you're interested in our services, there are links down below, and I appreciate you coming today, listening, and letting me drone on a bit about energy supply and demand. So thanks so much. Hope you have a great day, and we'll talk to you next week.